What is going on, guys? So today's video is going to be a little bit different than my monthly updates that I normally do. What I'm actually going to show you today is how much money or in dividends I'll be getting next year just based off of dividend increases uh, from the year of 2018. So what do I mean by just 2018? So basically what I'm looking at is what the company was paying back in 2017, and if I owned it between the time in 2017 to now, uh, if it has increased its dividend. And if it's increased its dividend in 2018 and I owned it, um, I kept track of that as well. Like I might not necessarily owned it in 2017, I owned it in 2018, but when I purchased it, it didn't have the specific dividend, and then it increased it, if that makes sense. So what I'm trying to understand is basically because my investment, and since my investment, how much additional revenue will I get or income next year based off of the increases that the board of each company has increased. So bunch of different companies. It is 21 companies in total, and I guess to be quite blunt about the incremental increase. So overall, even including one large dividend cut, um, I have about an 11% increase in the stocks that have increased this year. And if I were to delete GE, which I've now sold out of my portfolio, that jumps up to a dollar, or I'm sorry, 14%, and actually increases about to $256 over last year versus 208. So if everyone's not familiar, GE cut their dividend by about 50%, taking their quarterly payout from 24 cents to 12 cents. And I had about 100 shares of that. Sold out of that and used it to buy Philip Morris, I believe, right before they jumped the dividend. So let's just jump into that one. So earlier in the year, and last year, Philip Morris was paying about $1.07 per dividend, and they recently upped it by 7 cents per share, or almost 6%, 6-7%, and that's good for another $23 per year, even though I'm not doing anything except having my money invested in the company. So really interesting to see. Let's look at some of the other big ones. So Kinder Morgan, big jump of about 60% year over year. Icon Enterprise, so this $1.50 has been held pretty much flat over the past couple of years, if I remember correctly. Probably about since 2014 or 15, once the whole economy associated with oil in the oil industry and energy industry really took a dive. Now that refineries and everything are starting to really pay their dividends, no pun intended there, they've really increased by about 17% or so. Realty Income Corp, 3%, not a big surprise there, just based off the fact that, well, I own a lot more shares now, but anyway, we'll just keep it there. Not a big deal. But that's good for $8.40. BHP was about a 28% increase, just based off the fact that they do a 40% payout ratio, and the price of the commodities that they sell are increasing and increasing. Really looking forward to see what BHP does now that they just sold a bunch of their U.S. onshore assets to a different oil company. So it should be about $10.5 billion over the course of the rest of the year in terms of payout. Now, I don't necessarily know if they're going to immediately invest that into another operation, whether it's deepwater oil and gas, which they're staying in, I believe, or another mining operation in Australia, Brazil, or something like that. That I'm not sure, or if they're going to distribute to shareholders. I personally wouldn't mind if they distributed a pretty penny to me. I'm just going to reinvest it right back into BHP because I think they're the best mining company out there, and I believe in them for the long term, and I like their 40% payout ratio. I think that's a good idea. Although I would like accountable dividends that continue to grow and grow and grow. I also don't want the company to go belly up just trying to pay a dividend. So I respect the fact that, hey, some years the company's going to be making a couple $1 billion. Some years if the commodities go below, a certain threshold, we're not going to be making any money. I wouldn't expect the company to pay me. That kind of makes sense. WP Carry, small 1% increase. They increase it about 0.05 cents or half a cent every quarter. So next quarter it'll be about 1.025 cents. That's good enough for $2.85 since I purchased it last year. Abby, a great 50% increase. It's actually raised the dividend twice this year. Same with Union Pacific. It's gone from 0.665 to 0.8, which is good for 20%, and almost a $10 bill just for doing nothing. Philip Morris was the big one, another big one, $23, like I mentioned. BP was a big one. It was a small increase on a large position for me. So they went from 60 cents to 61.5 cents per quarter, which is about a 2.5% raise, which is good for $14 a year, which is pretty good. Hershey, very small raise, very small position as well, or a decent raise on a small position, good enough for 10% increase year over year. Wells Fargo, 117 shares or so, just a 4-cent increase, which is good for about 10%, and it's close to $20. So taking all that into account, the increase here, what is he even calculating? Let's try that. No idea what this is really calculating, but I guess on average, $3. I don't even know what this is calculating. I'm just clicking and dragging at this point. But I think what the most important thing is the average associated with the percentage increases through time. This isn't weighted in terms of shares or anything like that. This is just taking the total amount and whatnot. And then this is obviously just $208 throughout the year. I fully expect every single one of my companies that I'm invested in to either hold flat their dividend or increase the dividend. The only one that I'm expecting or have already received a dividend cut is GE. So that being said, I expect quite a few more dividend increases throughout the year. Disney to be one of them, to be sure, and quite a few others. I'm just trying to think if there's anything else I can think of. But regardless, it's $208 next year that I will now not necessarily have to work for, which is actually pretty cool. And that, to be put in perspective, increases 11% next year. Just this $208 that's invested is going to get another $10 itself, which I think is the coolest part of it. It's like, then you start making money on money. That's the real sweet part. So you take into account next year I'm supposed to make around $6,400 or so in dividend income for 2019. So if that's $6,400, all of that averages an 11% increase. If you think about it, that's going to be $7,000, and I don't have to do anything for 2020. Not including the fact that I would reinvest. That's $6,400. So that's $6,400 at 4%. That's what, $120. So the $120 and the 600 or so bucks from the dividend raises, it's going to be another $700 just by reinvesting my dividends. That's pretty sweet, So I can't really complain. Everything's starting to really snowball here. You think about it, $700 in payment raises just by the fact that I'm reinvesting my dividends, and they're growing the dividends. Now, of course, the dividends can be cut at any moment, so I'm not banking on that $700 increase for next year, just based off of that. But it really will start to help, because you think about it. Imagine in 2 or 3 years' time, if I continue to build just these numbers by 20-30% per year. Think about it. 11% on $10,000 is $1,100. So, just that alone is almost an increase of $100 a month without me doing anything. So just imagine if I. Anyway, enough of that. But really thought it would be pretty cool to see the amount of additional income I could receive just based off of the dividend growth and looking at the shares that I have. I probably missed a couple of the companies, so hopefully nobody gets too upset about that. But this is kind of a good example as to how the snowball can start. Once again, we're only through August, and there's a lot of raises that happen in the third and fourth quarter. So don't be too surprised if I, kind of bring up another scenario later in the year where we look at a couple other companies that have decided to raise the dividend, and maybe some of these companies that raise the dividend maybe a second time for the year. So, all right, guys, I really appreciate you guys stopping by the channel. Like always, if you have any suggestions for videos, I'm up for suggestions. So just leave a comment down below. And as always, if you have any questions like, why did I decide to invest in a certain company, or can I see your spreadsheet and how I can use it to benefit me and this and that, more than happy to send it along or send you to the right video. But yeah, otherwise, I will talk to you guys soon. Until then, I will be keeping up to date with my spreadsheet and hopefully making cool videos for you guys. So have a great weekend, and yeah, that's about it.